All right, so I wanted to. Someone asked a question today about Netflix 5 minute chart. Here's Netflix, and they were asking about they bought what I'm assuming they bought a stop entry above this bar, and they were asking about, and they got out what I believe below 1030, below this reversal bar, and they were saying, asking. They initially had a plan for 4 times their risk, which would be probably around, up there. And, well, they got shaken out on this bar, and they missed the whole trend. And they were asking, was that the right thing to do? And very subjective thing. And what I mean by that is you have to remember that the market is always doing something to make you question your trade. And it's very simple why. It's the market's always trying to get you to do the wrong thing. And that is simply because for you, if anyone was to buy above here and not, there has to be a reason for the other traders to take the opposite side of the trade. So for these people shorting below, well, what are they going for? They're going for a double top. So they're going for a failed double top and a measured move down, which takes you somewhere down to there. The odds were against it. So, and arguably they were going for just a move down to the bottom of the channel. So you have to remember first that the market's always doing something to shake traders out. And it's similar to the E-mini. Well, yeah, I'll show it real quick. Similar to this right here, if I can find it. Here. You get a spike up and then you get consecutive bars down, and the bears needed a little more, but they couldn't get it. And the bulls, when the bears needed one more bar, the bulls bought aggressively. So, in Netflix, same thing. We were channeling down with consecutive bear bars, but look at the size of the bars. Doji, bar closing on its midpoint, bar closing close to its low, but really not that big of a body. And so it's possibly a bull flag, and these two bars. So arguably we had a trend line break, and here was the attempt by the bears to reverse the trend. Well, look what happened on the next two bars. This tells traders that everybody bought this, and everybody saw it as a bull flag and not as a credible major trend reversal. Now I think this was good. We've had it's, look at the big picture. So I'm gonna get rid of this real quick. Ask yourself, let's look at the daily chart for a minute. Strong spike. Arguably, would you short below that bar? Probably not. It's a very tight channel, so most reversals to downside will fail. You have to remember that the context of this sell-off was simply a two-legged pullback. We went up for 2 legs, and then arguably we, tried to test down to here, but trying to think my thoughts through here. Well, I guess what I'm saying is, look here, we pulled back, went up for 2 legs. We had a leg up, pull back, and then a second leg. The second leg, it's it's strong, but there's a lot of trading range behavior to it. We went up, bears sold, so when we make a new high, bears are probably going to sell again, at least for a test down to here, and then it's going to fail most likely. So I don't want to get too involved in that. Let's just look at let's look at a few things. Well, there's one important thing to notice, and that is we had a bear trend, and then we had, you can call it a whatever, trend line break, and then a test down. Best bear bar of the move, so the odds favored at least a test up and possibly test up to here. So look at this. Here's a very often when you get a clear exhaustion bar, the first test is the top of the bar, the second test is 2 times. So measured move of the bar, and look what happened. As soon as we touched it, we turned down. So, as strong as this rally wasn't all that strong. So there wasn't a strong trend line break. We didn't have a strong breakout. So there was a breakout, but it wasn't just impressive. And this whole right here led traders to believe, we were going to go sideways. So the rally, we were going to probably have a rally, and we may even test all the way up to here. You can see we tested these lows, but the rally wasn't all that strong, and then it formed kind of a tight channel. So in terms of your question on should you have gotten out there, I think it was okay to get out there. It is get a spike in channel. You've had, arguably the best bull bar of this move, so probable exhaustion. You're close to the top of this trading range, measured move target. So I think it is okay to get out below this bar. It's a big bar, and we could get a test down. The odds would favor a higher low, though, if we did. But I will say, depends on your goal. Were you looking to get, you for sure got the minimum. Were you looking to get swing up, or you have to ask what your goal was. If you're going to, take a true swing and try to hold for as long as possible, if you're planning to get out at what is likely a minor reversal, then I would say you have to be prepared to get back in. So, for example, look at this bar. This is bears giving up that shorted here. Why is that? Well, I'm going to go back to the E-mini, because since that's what I primarily trade, it's what I'm most, I just remember what happened today. Right here, and right here. Actually, more right here. We had a bull trend and a trend line break. The bears see a wedge, first push, second push, third, spike in channel, trend line break. Bears want a trend to the downside. However, it's not very strong. So if the bulls get any sort of breakout, the bears are going to give up, because it may be a bull flag. So go back to the next, same thing here. Bull trend line break, but not a strong trend line break, not a strong bear trend. It's just two-legged move down, and then we bounce to the upside. So go back to Netflix. Oops, wrong symbol. There we go. Same thing. The bears really needed, they need a bear bar, strong bear entry bar, strong follow through, and another bar. And that will drive traders out, at least longs. So if you do get out, I think you buy here or here. This represents bulls giving up. The odds of if you bought here and put a stop down here, I'd say there's at least 60% chance of measure move. And you can see, look what happened when we reached it, we turned down. So, and another thing what I want to mention is, a major trend reversal is usually it's a trading range. It's usually simply a correction, if you will. In other words, most major trend reversals don't reverse anything when you really think about it. It's just a markets most most of the time the markets go sideways. So the odds favor two legs up after you had the major trend reversal. So for example, here's what I'm saying. We have a bear trend, you get a trend line break, and then at this moment you have the first leg up. So the odds favor the second leg up. In other words, the odds favor a higher low and another leg up. Well, in this case, since we had a leg one and we broke below the leg one and failed, we're probably going to get two legs up, not including this one. So we got first leg, pull back, second leg. However, at this point, you got to kind of question, is this a two-legged pullback or is this a bull trend? And there's one important thing to notice, and let's look at the 15-minute chart. So this was that rally I was talking about. Here was before I say anything, one advice I would give, one thing I'd give for advice is if you're ever confused, look at the signal bar, 10:30. Great looking bear signal bar on the 5-minute chart. However, look at the context, 10:30. If this was a 5-minute chart, would you get out below this bar? Probably not. It's a bull bar, it's a reversal bar, but it's a bull body, so it's probably going to fail and probably find buyers below. Well, pay attention to understand that a tight channel is consecutive. It's a spike on a higher time frame. So look right here. This is a channel to the upside. Doesn't look strong, but when you look here, bull bar. It's just consecutive bull bars. So look at this channel to the upside. There's one important thing I see, and that is, number one, there's no the best the bears could get was a couple bear bars. So it's a small pullback bull trend. Second off, what I want to point out, look at this. Usually when you get an exhaustion bar, the bears really won't follow through very quickly. You will have bears who will sell this close and be very quick to get out, and they simply because they're selling every spike all the way down, and they'll lose money on the last one. Well, look at this close. The open was 26.08, the close was 26.10. Look what happened on the next bar. Because the bears had no follow through, everyone in the rolled by, and we started a rally. So back to what you're asking. The market's always going to make it difficult for you to stay into a trade. And that's simply because the market's job is to be as efficient as possible. And when I mean efficient, I simply mean that I don't even want to use that word actually. So forget what I just said. The market is trying to maximize volume, not efficiency. Now, I think the market, it's simply trying to facilitate the most trading. So how would it do that? Well, in your case, it's a perfect example. You bought above here, you got out, and it's forcing you to have to buy again. So enough people do that, it drives the market up. That's why it never looks, a trend never looks that great. Look at all these prior days. It's really, look at this, move Thursday. Bear bars sell off, and then you get some bull bars, more sell off. Possible bull reversal bar, wedge bottom, but what's more likely? Well, probably more down. 3 legs down. It never looks great. Here, strong breakout, but it's forcing you to risk a lot, and you have to understand that it's hard. You have to understand that the market is trying to keep you out of the good trade and get you to do the wrong thing. The market's always trying to get you to sell below a bad stop entry in a bull channel. The traders that are doing this are going to be very quick to get out. And most of them, realistically, are selling this close and scalping out. Look at this. No, not quite, but close is close enough. Arguably a measured move based upon that bare body. It's really won't be that helpful, but arguably a measured move based upon the trim channel lines. So, anyways, I hope this helps. It all depends on your goal. You did the minimum, and that's okay. There's nothing wrong with what you did, and hope that helps. All right, have a good evening.